How many times do you get stopped out of your trade just for it to go to take profit? I know if you're like me, this happened to me so many times. And in this video, I'm going to break down not only a simple little trick for what I do every single trading session that has helped increase my win rate extremely over the years. I'm also going to show you a bunch of examples. So I'm going to show you some examples on NU, gold, GJ, and GJ, and maybe a couple others. But ideally, this would normally be just kind of a sit down video where I tell you what to do. But in this video, I'm going to tell you and show you what to do. I think it's going to provide a ton of value. So if you're still watching right now, smash that like button, bring out the notepad because we're about to dive in. Okay. So right off the bat, the thing that we are going to be waiting for is a false move in your session. So I don't care if you trade Asia, I don't care if you trade London, or if you trade New York like me. What I want you to do is wait for the market to open up, move in the opposing direction of where you think it's going to head that day. Okay. So ideally, what we're doing is we're waiting for a false move at the beginning of the session to trick traders in to then take them out, and then we look to get involved. So I'm going to show you an example here. Okay. So let's say, for example, we want to short in New York session. So let's say New York session opens up like this. We want to wait for New York to push up first. Then we want to see a break of structure to then take the market in the opposing direction. The same thing can be said for London. You guys can go back test London, but I just watch this for New York session and then you can go apply yourself. So the same thing goes for the opposing direction. Let's say, for example, we want longs in New York. We're going to wait for early traders to get stopped out, then a shift in the direction we want to take it in to then take the market in that direction. Okay. So we can call this a liquidity sweep. We can call this a false move. A liquidity sweep, for anybody who doesn't know, is when the market will sweep an old high or take stop losses and then head in the opposing direction. Now, we only know it's a liquidity sweep when it breaks structure. So let's say, for example, there's a consolidation like this and the market takes this side. We don't know it's a liquidity sweep until we break below the area that caused the push up. Same thing will go for the other side. Say we have some sort of consolidation. We don't know it's a liquidity grab or sweep until we break above the high. Otherwise, how many times has this happened to you? Or maybe you're anticipating a liquidity sweep and it just continues, right? Because you never broke above the area. So now that I've explained this, let's just break this down, okay? So highlighted here, we have Asia session, we have London session, okay? So if I play this out, New York session is purple. So I took this trade. I wanted to see New York session trade higher first, induce people into the market, trap people, and then I wanted to short, okay? So this is perfect. You can have your bias for that session, but you want to see the market trade in the opposing direction first. This is going to help you so much. I promise you, you are going to win more trades. I promise, I promise, I promise. And I can't wait for you to come back to this video and comment, okay? Seriously, it's guaranteed. If you wait, now that's another important part here, guys, is you have to wait. You have to actually have the patience for the market to trade in the opposite direction first. And I'm going to show you another example as the video goes on. But look, we have New York session open up here, 8 o'clock. We push up first. Here we have that little consolidation like I was talking about. And then the market pushes to the downside here. Okay. So this is where I look to enter the trade, right within this imbalance here. So I market executed within here, have my stop above here, and I got out below London lows somewhere. Okay. So if I just go and play this out, you can see that we traded up to begin. I'm expecting a bearish New York and we end up taking the low. Okay. If I go over and show you what the hourly time frame looked like, here we have New York. We push up, and then New York finishes down here for the day. All right, and the same thing will go for the opposing side. Let me take a minute to introduce to you one of the top new prop firms in the industry, Think Capital. Think Markets, a fully regulated broker, has entered the prop space. With over 15 years of broker experience, this is massive for us traders. With up to $600K in capital to manage, 5K to 300K accounts, it gives us the perfect resources to succeed. Another bonus is they offer to USA clients, which is massive for you US traders. Use the link in the description and code RMTrading for 15% off any challenge. Let's get back to the video. All right, so let's take a look at gold here. I just want to show you on each asset. That way you can see that it is applicable not just in forex, not just in gold, not just in indices. Okay, the liquidity sweep, it's such a powerful thing, but it's combining it with that false move in the session that's going to bring a lot of results. Okay, so let's just say we're looking for a short in New York. We want to see gold trade lower. Maybe we want to see it trade into these lows over here. Okay, if I go over on the 15-minute time frame, you can see that we have London session over here, we have Asia over here. We're at the low of the day. We don't want to be shorting at the low of the day. We want to short higher, right? It's the classic sell high, buy low. We don't want to sell low and buy high. That's not what we want to do. Okay, so New York session is going to open up over here in a second, and you'll pay attention. We just push up right away. So to me, these equal lows looked like an easy area that we were going to sweep. Okay, so New York opens, and then we can look to take the market down like we expected the market to do, or what we wanted the market to do that day. We wanted to have a bearish bias, so we wait for the market to trade in the opposing direction to then take the market in the opposing direction. Okay, so here we have the push above, right? We had the false move to start, and then on the 5-minute time frame here, you could have entered anywhere within this imbalance area with your stop above the high, looking to target these lows. Okay, so if I just go out and play this, okay, if I just play this out, you can see, hopefully this actually doesn't get stopped out, but you can see we had the false move in New York, and then we trade the other way and we end up taking the stop losses here. Okay, now the purpose of this video isn't me to dive deep into my strategy. I'm trying to show you guys just the overall concept itself of the false move to start. I'm showing you a couple trade examples, like AU I took, GJ I also took, which I will show you here in a second, NASDAQ as well, and I will show you guys this in a second. But this gold trade, this is just an example of a trade that I was forward testing. But like I said, this isn't me to show you in depth how I trade. If you want to know how I trade, click the link in the description and check out all the testimonials. You can see all that for yourself. Otherwise, just keep watching the video. All right, guys, so I got a couple examples here to show you on NASDAQ actually, all right? This was absolutely beautiful. I got a short example and I got a long example for you, okay? So when I'm looking at the market here, guys, I want to see this high here get run. Okay, I want to see this get run, and then I'm expecting for the day, after we run this high, that we take the market and head the other way. Okay, we take the liquidity, sorry, and we head the other way. So here we have Asia, here we have London. I want New York to trade up higher, and then look to take the reversal. So here, you can see New York is in purple. We push up, right? We push up, then we have the shift below. And if you guys remember what I was talking about, we don't know it is a break unless we break below the area that caused the shift up, vice versa for the longs. So here you can see we have the push up. We don't know it's a sweep until we break below the area that pushes up. Okay, this is a perfect example. So if I just go and play this out, creates a nice, lovely little imbalance here. You can market execute anywhere within here with your stop above the high here. And yeah, just look to target, let's say 2R. Is 2R good with you guys? And let's just play this out. Beautiful. Okay, absolutely beautiful here. Remember, we trade up first, and then we look in the opposing direction. Now I'm going to show you a beautiful long example here on NASDAQ, okay? All right, so now look, guys. We have all this liquidity over here. So when I got on, I wanted to see this get run. We also had a daily imbalance. Not sure why I did that. We also had a daily imbalance over here that I wanted to see the market reach for. Okay. So we're over here on the hourly time frame now. And let's jump to the 15 actually. We want to see the push down first. So I want to see the market down here. I'm expecting a bullish day, but at first I expect it to come down here. And that's exactly what happens. Look at this. We have the false move in New York session all the way down. Okay. False move. Then we come down even lower and we're waiting for the shift above. So here is the break of structure. Here's the sweep, right? Because we don't know it's a sweep until we, what? Break above the area. Okay, so this was our confirmation. And yeah, you could have market executed anywhere within here with NASDAQ with your stop below here and look to take it up into these highs here. Okay, so let's just go and play this out. You can see we absolutely smash. So bullish day, you want to be getting in at the low, right? At the low. You don't want to be getting in when the daily candle is already bullish. You want to be trying to get it in, get it in. You want to be trying to get in when the candle is looking bearish, right? That's that false move, right? That's that false move that we want to see. Beautiful, beautiful stuff. Here we have GJ. This is another trade that I took. I'm expecting longs, okay? I want to see the market go higher, all right? So I'm waiting for a stop hunt. I'm waiting for a trap, right? I'm waiting for a trap. So if I play this out, you can see New York actually heads up first. So when the market heads up first and you're looking for longs, you don't want to get in just yet. Don't think the market's leaving without me, oh my God. No, you want to wait for the market to then sweep that early move and then go, okay? So here you can see we end up taking the low. I fast forwarded that way too fast. But you can see we end up taking this low. Here we have the break structure on the 5-minute because we sweep lower and then we break above the area that pushed it down. I actually entered this trade up here because I wanted more confirmation with my stop at this low. And I ended up getting out of this trade up here for a 1 to 2. So if I just go and play this out, you can see it almost hits TP, comes all the way back down on your boy, and then we end up pushing all the way up, which is beautiful. So there you go. Simple concept that involves patience, right? It involves patience. I'm going to put me in the middle of the screen right now. Let's see if I can even go bigger. No, I don't like that. I think it's a little blurry. Simple concept that involves patience. The market is not going to leave without you. And if it does, who cares? Wait for that false move. Now, this can happen in London session as well. This can even happen in Asia, but I wouldn't trade Asia unless you have to. London session does the same thing. You'll see a little bit of a false move. Maybe it takes out Asia highs. Maybe it takes out Asia lows and then goes in the opposing direction. Wait for the false move. Wait for the liquidity sweep. And you are going to be rewarded. You are going to have a higher win rate. Yeah, you may have some less trades sometimes, but better trades, right? Better trades. I hope you guys enjoyed this type of video. Please smash that like button if you haven't. If you made it to the end of this video and you want to learn more about how I trade in depth, make sure to check out the link in the description. We got weekly live calls. We got daily breakdowns. We got case studies. We got swing trading strategies, day trading strategies, you name it, we got it. And yeah, I just appreciate you all so much. Thanks so much for watching this video. Hit subscribe. What do I say at the end of every single video? Let's be 1% better every single day.